Welcome to MTRS_Market Pulse. Today, August 2nd, we are covering the top 5 Indian stocks making the biggest moves across banking and financials, IT and technology, auto, metals and mining, FMCG, one standout name from each sector. Let us break down today's biggest sector movers, one at a time. First up in banking and financials. Bajaj Finance made a dramatic move today, surged plus 8.32% to 1,141.20 Indian rupees. Investor sentiment is being shaped by Bajaj Finance's 29% profit surge in Q1, driven by robust NI and ORM growth, REDIF. Consumer durable financing and personal loans are growing, but the market is watching credit quality in a slower growth environment. The EMI card business and co-branded credit card partnerships are the emerging fee income drivers. Watch for any commentary on the Q-on-Q credit cost trend. Moving to IT and technology, TCS dropped sharply -2.72% to 2,365.60 Indian rupees. Investor sentiment is being shaped by South Korean stocks plunge, erasing RE rally gains as chip sell-off deepens, Nikkei Asia. Large deal wins, measured by total contract value, are the most important signal for TCS revenue trajectory over the next 12 months. BFSI and retail verticals in North America are the key spending sectors to watch. Any IT budget revision by US banks would move TCS estimates meaningfully. Moving to auto. Tata Motors climbed plus 1.66% to 339.75 Indian rupees. Equity markets are responding to reports that Wall Street ends mixed as investors focus on tech earnings. India passenger vehicle market share and EV penetration, particularly Nexon EV, is the domestic growth story. JLR's transition to full BEV by 2030 requires significant capital but positions the brand well. Any update on the next generation JLR platform timeline would be a catalyst. Moving to metals and mining. Tata Steel edged higher plus 1.48% to 189.69 Indian rupees. The move follows reports that what puts BHP, ASX BHP, back in metals focus? Kalkine Media. The near-term technical picture for Tata Steel looks constructive. Watch the 197.28 Indian rupees level as the first meaningful resistance zone. A close above there on decent volume would be an encouraging sign for bulls. As always, this is analytical commentary, not financial advice. Moving to FMCG. ITC dipped -1.42% to 281 Indian rupees. Equity markets are responding to reports that Wall Street ends mixed as investors focus on tech earnings. After today's weakness, the 272.57 Indian rupees area is the first meaningful support level to watch for ITC. A stabilization there would be the first sign that sellers are losing conviction. This is our analytical view, not investment advice. Now let us zoom out to the broader macro picture for Indian markets. The rupee is strengthening against the dollar, trading at 95.39, which matters for import and export-heavy sectors alike. Foreign institutional investor flows remain the key swing factor for Indian equities in the sessions ahead. Before we wrap up, here is your watch list for the sessions ahead. Keep a close eye on central bank speakers and rate commentary, and key economic data releases. Any one of these could be the catalyst that defines the next major directional move. Independent market coverage, no subscription fees, no paywalls. If this analysis saved you time and helped you think more clearly about the market, please like the video. It costs you nothing and it directly funds more content like this. Subscribe for daily coverage across indices, stocks, commodities, forex, and crypto. Tell us in the comments, what are you watching most closely right now? That wraps up today's coverage from MTRS_Market Pulse. This content is for educational purposes only, not financial advice. Always do your own research. Stay disciplined, and we will see you tomorrow. That is today's top 5 Indian stocks from MTRS_Market Pulse. Subscribe for daily sector-wise coverage of Indian and global markets.